Welcome back to InfoTrend's newest playlist, InfoStock. Disclaimer: this video is for educational purposes only and is not investment advice. Always consult with a qualified financial advisor before making any investment decisions. Past performance does not guarantee future results. I'm your host, and today, we're breaking down why 3 stocks are absolutely crushing it right now. Micron is up 77% in just the last 12 weeks. NVIDIA continues its multi-year bull run, and Palantir has seen a dramatic revaluation higher. If you've been watching the market, you've seen these 3 names everywhere. But here's the thing: most people don't understand why. They just see the green candles and wonder if they missed the boat. Today, we're breaking down the real catalysts, the numbers that actually matter, and what's driving the AI revolution that's reshaping our entire economy. Let's get into it. Before we talk about individual stocks, you need to understand what's actually happening right now. We are living through one of the biggest technology transitions in history. It's called the AI supercycle, and it's not hype, it's backed by real numbers. Think about what happened with the internet in the late 1990s. Companies that provided the foundational infrastructure saw explosive growth. Well, that's exactly what's happening now with AI, except it's moving faster and bigger than ever before. Data centers around the world are undergoing massive buildouts. Cloud providers like Amazon, Microsoft, and Google are spending tens of billions of dollars to construct new facilities. Why? Because training and deploying artificial intelligence models requires insane amounts of computing power. We're talking custom-built processors, millions of GPUs, and next-generation memory infrastructure. Here's the critical part: this isn't a one-year phenomenon. Industry analysis shows that DRAM and NAND flash memory bit shipments are expected to increase approximately 20% from 2025 to 2026 alone, and that trajectory continues beyond. This is a structural shift in how technology companies allocate capital. The beauty of the AI supercycle is that it creates winners at multiple levels. You've got the chip designers, you've got the manufacturers, and you've got the software platforms that help enterprises actually deploy AI into their business operations. Today, we're looking at all 3 of these layers. Let's start with Micron technology. If you haven't heard of Micron, you're not alone. It's not as sexy as NVIDIA or as talked about as Palantir. But here's what's absolutely mind-blowing. Micron just reported earnings that blew past every expectation analysts had. In their most recent quarter, Q1 fiscal year 2026, Micron reported earnings per share of $4.78. The Wall Street consensus was $3.94. That's a 21% beat. The real story is in the momentum. Micron's revenue grew 57% year-over-year in that quarter. 57%. That's supercycle growth. And they're guiding for even better results in the coming quarter. Management is projecting Q2 revenue of $18.7 billion and earnings per share of 8.42. If those numbers hit, we're looking at record profitability quarter after quarter. But why? Memory. Specifically, AI-focused memory. When you're training a large language model, like ChatGPT or Claude, you need RAM. Lots of it. DRAM, to be specific. And when you're deploying these models in data centers where they serve millions of requests, you need fast, reliable memory infrastructure. That's where Micron comes in. Micron manufactures 2 types of critical memory: DRAM and NAND flash. In their latest quarter, DRAM sales jumped 69% year-over-year. NAND revenue grew 22% year-over-year. That's the growth rate of a startup, not a mature semiconductor company. The company's gross margin expanded to 56.8%, up from 45.8% the quarter before. 11 percentage points of margin expansion in a single quarter. The reason? Supply constraints. This is a seller's market for memory. There's more demand than supply, which means Micron can raise prices. And the company is executing incredibly well on cost management. Now here's where the future gets exciting. Micron is investing heavily in high-bandwidth memory, or HBM. This is the next-generation memory architecture that powers AI accelerators. Like NVIDIA's Blackwell chips, the company increased its capital expenditure, guidance to approximately $20 billion for fiscal 2026, because they're building new production lines to support HBM production. HBM has higher margins than standard DRAM. More HBM production means even better profitability. And here's the thing, Micron is supply-constrained by choice. They've stated explicitly that they're unable to meet all customer demand. Demand is exceeding supply by a substantial margin. Management expects supply constraints to persist beyond calendar 2026, which means pricing power remains intact for at least 2 more years. CEO Sanjay Mehrotra put it bluntly, AI-driven demand is here, and it is accelerating. He also said something powerful. Memory is now essential to AI's cognitive functions. That's not marketing speak. That's an acknowledgement of the fundamental importance of what Micron sells. Micron recorded free cash flow of $3.9 billion in a single quarter. That's a quarterly record. The company is in a position of enormous financial strength. Now, let's talk about the elephant in the room, NVIDIA. If Micron is the dark horse, NVIDIA is the thoroughbred that everyone already has in their portfolio. NVIDIA just reported Q3 fiscal 2026 results, and these numbers are so large they almost lose meaning. Record revenue of $57 billion, up 62% year over year. That's exponential growth, and it's being driven almost entirely by data center demand. Data center revenue reached a record $51.2 billion in Q3. That's basically the entire company's revenue 3 years ago. It represented 90% of total company revenue. Every other business line, gaming, automotive, professional visualization, is rounding error compared to the data center juggernaut. Data center revenue grew 66% year over year. Most companies would be thrilled with 10 to 15% growth. NVIDIA is expanding at more than 4 times that rate. Why? Because of Blackwell. That's NVIDIA's latest generation of AI accelerators. Management described the Blackwell situation with 2 words: sold out. Jensen Huang, NVIDIA's CEO, said it directly. Blackwell sales are off the charts, and cloud GPUs are sold out. Blackwell achieves the highest performance and best overall efficiency in independent benchmarks. But here's the kicker. Blackwell delivers 10 times the throughput per megawatt compared to the previous generation. That's a massive efficiency improvement. Why does efficiency matter? Because when you're running data centers at scale, power consumption is one of your biggest operating costs. If NVIDIA's new chips deliver 10x the performance per watt, suddenly it becomes economically viable to deploy more AI models and expand the scope of AI applications. That creates demand for more chips, which feeds back into growth. The company's gross margin is holding up at 73.4%. That's exceptionally high. For context, Apple's gross margins are typically in the 40s. NVIDIA is generating more profit per dollar of revenue because it has both pricing power and volume at scale. For Q4 fiscal 2026, NVIDIA is guiding revenue of $65 billion. That would be larger than Intel's entire annual revenue just 5 or 10 years ago. Some analysts are even more bullish, suggesting the stock could gain as much as 89% in 2026. But here's the reality check. NVIDIA's gross margins are projected to tick down slightly in fiscal 2026 due to rising costs associated with new Blackwell production ramps. Management guides for 71.2% gross margin in fiscal 2026, which is still exceptional but represents a decline from recent levels. That said, NVIDIA still has several structural tailwinds. Cloud providers like Amazon, Microsoft, and Google are all in a race to build out AI infrastructure. The company is working with governments around the world. South Korea just announced plans to deploy over 250,000 NVIDIA GPUs as part of a national AI initiative. NVIDIA is also diversifying beyond just consumer AI applications. The company launched BlueField 4, which is designed to be the operating system of AI factories. Industry leaders are building next-generation data center platforms around this chip. That's a new revenue stream. In automotive and robotics, NVIDIA is positioning itself as the foundation of autonomous vehicles and AI-powered physical robots. The company just partnered with Uber to scale autonomous vehicles starting in 2027, targeting 100,000 vehicles. That could be a multi-billion-dollar business by the end of the decade. At the end of the day, NVIDIA is supplying the picks and shovels to the entire AI gold rush. Every major cloud provider and every enterprise deploying serious AI infrastructure is buying NVIDIA chips. Now, Micron and NVIDIA are selling hardware. But what about the software? How do enterprises actually deploy AI in their business operations? That's where Palantir comes in. Palantir Technologies has experienced a transformation over the past 2 years. The company used to be known primarily for government contracts. But in 2025, Palantir emerged as a commercial AI powerhouse. The market has taken notice. Here's the key: Palantir's artificial intelligence platform, or AIP, is now being adopted by enterprise customers across virtually every industry. The company achieved a 65% year-over-year increase in U.S. commercial customer count by the end of 2025. That's explosive growth. But the real genius is not just the technology, it's the business model. The company pioneered something called the bootcamp sales approach. Instead of traditional enterprise sales cycles that take months or years, Palantir hosts 5-day intensive workshops, where customers build live AI tools on Palantir's platform in less than a week. They go in with a problem and come out with a functioning AI system. This approach has fundamentally shortened sales cycles and increased conversion rates. Palantir achieved a Rule of 40 score of 129 at the 9%. That's a metric. Combining revenue growth and profit margin, management highlighted that this was the second highest score globally among large-cap tech companies. What makes Palantir different from other enterprise software companies is that they sell something deeper than just a product, an ontology. Think of an ontology as a digital twin of your entire organization, all your data, all your business logic, unified in one system. Most enterprises are sitting on mountains of data, fragmented across dozens of different systems. You've got data in your ERP system, your CRM system, your legacy mainframe systems, your cloud databases. It's a mess. Because it's a mess, you can't deploy sophisticated AI models across it. Palantir's ontology approach unifies all that data and creates a single source of truth. Once you have that, you can deploy agentic AI, autonomous AI systems that can actually execute business logic. An AI agent that automatically optimizes your supply chain. An AI agent that detects fraud in real time. An AI agent that manages your pricing and inventory. This is different from ChatGPT-style generative AI. That's useful for writing and brainstorming, but it's not executing real business processes. Palantir's agentic AI is making decisions, taking actions and managing operations autonomously. That's a much higher value application from an enterprise perspective. Management at Palantir CEO Alex Karp and CTO Shyam Sankar have become the primary voices in the agentic AI movement. They're not just running a company. They're shaping how the industry thinks about AI deployment. That thought leadership translates into competitive advantage. On the government side, Palantir's business remains strong with long-term, multi-year contracts. But the commercial side is where the growth is accelerating. Analysts are forecasting 2026 revenue for Palantir to reach between $5.5 billion and $6 billion. For context, the company did approximately $3.4 billion in 2025 revenue. That's 75% growth expected in 2026. The big question Palantir needs to answer is whether the commercial growth is sustainable, without requiring proportionally more headcount and deployment resources. The bootcamp model is working, but it's still labor-intensive. If the company can prove it can scale revenue faster than costs, then operating leverage will expand dramatically. Management also indicated they're investing in new markets. Asia and the Middle East are targets. They're launching the Warp Speed Manufacturing Operating System, designed to support U.S. reindustrialization. That's a new product line with significant addressable market. Here's what's notable. Palantir achieved profitability in 2025. That's rare for a growth company. Most companies growing at 70% are still losing money. The fact that Palantir is both growing rapidly and profitable makes the investment case much more compelling. So we've got three companies benefiting from the AI boom in different ways. Micron is the memory supplier. NVIDIA is the chip manufacturer. Palantir is the software platform. The synergy is beautiful. Enterprises need chips and memory to build infrastructure, and they need Palantir's software to actually deploy AI at scale. What are the catalysts that could accelerate these stocks further? And what are the risks? Starting with catalysts, all three companies are projected to deliver significant earnings growth in 2026. NVIDIA's guidance of 56 to 62 154, 62% earnings growth is remarkable. Palantir needs to demonstrate that it can maintain 60% growth while expanding margins. If that happens, these valuations could expand further. All three are launching new products and technologies. The macro environment is supportive if the Federal Reserve keeps interest rates manageable and corporate spending on AI infrastructure continues to accelerate. That's a tailwind. Enterprise CapEx is flowing into AI infrastructure at record levels. Now the risks? Competition is real. NVIDIA faces competition from AMD and custom chips from cloud providers. Micron faces competition from SK Hynix and Samsung. Palantir faces competition from Databricks and Snowflake. Margin compression is a possibility. If memory prices fall or NVIDIA faces pricing pressure, margins compress. Micron's CEO acknowledged margins could normalize as supply constraints ease over time. An economic slowdown would be a problem. If enterprises hit the brakes on AI spending, growth could slow rapidly. Right now, everyone is in growth mode, but that's not guaranteed. Regulatory risk exists. AI is increasingly under scrutiny. Palantir faces potential government scrutiny, given its work with classified information. NVIDIA and Micron could face export restrictions, and there's valuation risk. These stocks have already run significantly. Micron is up nearly 77% in the last 12 weeks. NVIDIA has benefited from a multi-year bull run. These valuations reflect significant expectations about future growth. Any disappointment could result in sharp reversals. The key thing to understand is that these companies are benefiting from a real structural shift in how technology is deployed. This is not a bubble, it's a supercycle. But supercycles do eventually mature, and when they do, growth rates normalize. These companies are worth owning for long-term investors. But timing, entry point, and risk management matter. So here's the bottom line. Micron is the value play. Margins are expanding, growth is exceptional, and the company is sitting on a multi-year runway of profitable growth. NVIDIA is the blue-chip growth play. It's the most established, most profitable, and most dominant position in the AI chip market. It has market moat and pricing power, but it's also the most expensive and the most crowded position. Palantir is the high-growth software play. It's trading on the promise of becoming a core enterprise AI platform. The company is executing well, but it needs to prove that commercial growth is sustainable, and margins can expand as revenue scales. This is a higher-risk, higher-reward opportunity. The exciting part is that we're still very early in this AI supercycle. Data center buildouts are ongoing. New AI models are being developed at an accelerating pace. Enterprise adoption is just beginning. This could be a multi-year trend that rewards investors who position themselves correctly. If you found this breakdown valuable, make sure to subscribe to the InfoStock playlist. Because we're diving deeper into trending financial topics, individual stocks, market movements, and the catalysts that drive returns. Hit the bell icon for notifications so you don't miss new videos. Thanks for watching, and I'll see you in the next InfoStock video.